Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, November 7th, 2013. This is the second part two of the short trade update videos, where I'm covering active short trades on the site, which may be offering objective entries um, or add-ons to an existing short position. And we're starting out here with HSOL. Looks like Hanwha Solar One Company, and this was added as a short trade on a break of this trend line. That's where we triggered the entry. A nice bearish rising wedge pattern, I should say, defined by this lower uptrend line, which we had a breakdown, a move just below the first support level, and we had a counter trend bounce to come back and back test the wedge, make a beautiful back test of the pattern. So, anybody following this trade or in the trade, this was really a golden add-on or new short entry here on the back test. The stock is now down, almost 6% today. Negative divergences in place on the wedge, and at this time, I favor T2, the second target, as my preferred target. I think once we get below this first target level, it looks pretty thin here on the volume of price histogram. And as I mentioned recently in the solar stocks, if I add the volume here, take a look down here at the bottom, uh, I'm seeing what appears to be a buying climax in a lot of these stocks. This very high volume surge on the push to new highs. So if indeed that is a buying climax, then that would tell us that this was most likely a top, at least an intermediate top put in these stocks, and there's going to be some downside to come in the following weeks to months here. Okay, the next one up is Hertz, symbol HTZ. This remains one of my favorite trades. It's continues to play out. It's still profitable. This was last updated on the site. Let's see. I think that was back on October 17th. So essentially, what we're looking at here, we had a breakdown of this long-standing steep uptrend line. Prices went push, made a slightly higher high, and then from this point here, I highlighted how, especially on the longer term time frames, this is a bear flag pattern or bearish pennant. We have the flagpole from the peak here all the way down here, set up in a bearish pennant. And I believe I last mentioned this as an objective entry on a breakdown of this bear flag or bearish pennant pattern, I should say. And prices have since broken down. I still really like this trade. What happened is the other day we had a nice move, and now we've fallen into this thin zone here. And the thin zone again is defined by these histogram bars on the volume of price. So we see, this whole move from the top of the thin zone down to the bottom. There were very few trades that occurred in that period. So it's similar, if you will, to a gap where you don't have a lot of trading activity. So these bars up here represent a lot of overhead supply or resistance. So as long as prices stay within this thin zone, which I expect them to do, we'll probably see a pretty quick move down to this first target level here at 1820, and ultimately my final and preferred target at 1705. Let's take a quick look at the weekly chart, which I had posted when I put this trade up. Let's move this volume out of the way here. Basically, this was Hertz challenging its all-time highs back here that it hit before the great bear market in 2007, 2008. And we were at overbought levels, really insanely overbought levels, rarely seen on the RSI, readings above 80. And while the stock was challenging its all-time high. So the short was actually put on back here. And as you can see, this is playing out well. And I've marked here on the red arrows show all the crossovers on the weekly PPO, which is very similar to the MACD. And as you can see, the moves following those bearish crossovers these are trend changes. These aren't just, you can call them corrections. It's semantics. But either way, these are big moves, typically well in excess of 10%. And the last one we had was right here with this red arrow. We had this extreme overbought reading, which of course led to this huge drop. That was of course during the last bear market as well. But with that being said, I do expect additional downside on Hertz based primarily on both the weekly chart and the case I've made for it here on the daily chart. JASO, another solar stock, shorted on a break of this uptrend line. Like all solars, it bounced a couple days ago. We had a sharp initial, what I believe to be an initial counter trend rally in the solars, but that kept us well below my suggested stop level, and we're once again below the trend line. Solars are down sharply today, so I believe that the first target has a very good chance of being hit, and we'll go from there. So, as I said, negative divergences from this peak high right here up against this resistance line. We found resistance back here. That's in early 2012. Resistance again here in May, and this is where we made another equal high. And at that point, the MACD, the RSI were making considerably lower highs, which is a negative divergence. So that tells me that this stock, has probably quite a bit to come, and I think the first target has a pretty good chance of being hit. Stops remain on a move above this resistance zone. JPM, this is the great JP Morgan. I'm covering this one not so much as it's one of my favorite short trades. It's a little frustrating because we've had, this short trade was entered here on a break of this uptrend line, and it was very profitable. Relatively speaking, for as big a company as JPM is, when you short or go long a mega cap, multi-billion-dollar company, you're not looking usually at 40-50% gains in a few weeks. So either way, it was a close. It was a very profitable trade. Still is for such a large cap company, and it just missed the target. I have a first target set at 50.04. We had a couple lows here. There's 50.05. So I'm sorry, the low, if you look on the upper left-hand side at the box on that candlestick, is 50.06. So we missed it by two pennies there. Let's see here. Again, it came down close to the target. So we just missed it there. Obviously, these are only suggested cover levels where you'd want to cover. So some of you may have gotten out at that point, but longer term, I think the stock still has some more downside based on the scope and how well defined this uptrend line was. We had divergences in place at the top, and weekly chart shows this rising channel. And what I would expect over time, I would not be surprised to see JPM come back and back test this downtrend line. This was a bullish breakout here when JPM took that out, and it's moved up and now broken down below this rising channel, and so ultimately it may come down to that level. That's not my official target. We also have some horizontal support here around the 48.60 level, but I just wanted to talk on that one and mention that that's still an active trade on the site. KBH, not much to say on this one, similar to the Hovanian home builder. This is another home builder. It's just these home builder stocks have just been in a range going basically nowhere. They did break down. This still is a profitable trade. In fact, it hit the first target a while ago back here and has been dancing around that first target level, which is a support level, for a while. And, overall, especially longer term, I think the stock still has some downside to go, so I'm leaving this one on for now. Again, not one of my favorites, but if you were to look for an objective entry, I would be below these recent lows here, 1586. To be safe, let's say around 1575. Any move under 1575 would likely bring it down to the T2 level in relatively short order. Okay, this is Macys. Now, Macys, for all intents and purposes, actually hit the final target, but I made a rare mistake of when I set up this target. I don't know what I was looking at. The horizontal line was hit, and as most of you who follow the site know, I typically place my closing orders, in other words, on a short, a buy to cover order, will be somewhat above that level as to help assure a fill. Well, That line was actually up higher. It was around 42. It's hard to move the cursor here, 42.22. And we hit that level a couple times, although I had listed the target as 42.08, and that's actually where I had my own stop. So I never got a fill on this trade at that time. Wasn't aware, but the stock did really come down to that level. So once again, some of you may have covered. These are just suggested areas. I didn't realize it till the stock had moved off. Now, where I'm looking at, or what I'm looking at here on Macys, for those of you still in the trade, I think still has a chance to play out. I'll put this resistance line here. We have a reaction low right here at the tip of that finger pointer. Another one there, another one there. So this is a pretty well-defined resistance level, and that it's also right about entry because the entry I believe was on the breakdown of this rising wedge pattern. So, a stop somewhat above that would at least assure a break even on this trade for those of you who have not taken any profits on the trade. So I'll leave it on for now. Wouldn't really be shorting this one if I weren't already in it. I'm just covering this for those of you who might still be in the trade, being the fact that it already hit my final target level and bounced. That's all I wanted out of it. So again, just an update for those who might be. MIC, Macquarie Infrastructure. This one has been on for a while. We had a breakdown here of this long-standing uptrend line. This one goes back, goodness, all the way till, third quarter of or fourth quarter, early fourth quarter of 2011. That uptrend line. So a multi-year uptrend line, which broke down here back in June. It looks like. May or June, and did a nice clean back test, two back tests, higher level back tests. And since then, I have added this uptrend line, which has acted as pretty nice support here. You can see several weeks of tags of that trend line, and now prices have finally broken below the trend line. So although not one of my favorite trades, for those of you who are still in this trade or anybody looking for additional short ideas, you could certainly short MIC here with a stop. Relative on this one, I have multiple target levels, and I may even extend it to a fourth target down here on this line around the $36 level. So when shorting a stock, I like to use a risk to reward ratio of no less than 3-to-1. So basically, you just calculate how many points to your preferred target. If it was targeting the 4110 level, then that's about 12 points. So you want about a 4-point stop. So your stop would be about 57.20 roughly. That's how a 3-to-1 risk reward ratio would work out. You're risking, $1 of loss for $3 of of gain potential. NTRS, I still like this one, although not crazy about it. We had this bear flag. We did break down. The bear flag pattern didn't go all the way down to its measured projection, fell just shy of my first target before reversing. And although we moved a little bit above, we're still dancing around this resistance level. So for now, the trade still looks good. I would like to see the stock turn around for anybody that's still in the trade. Stop, not too far above these recent candlesticks here. Maybe it depends where your entry was, but not much more than the $58, $57.80 level would be your stop. But I do think over time, this trade has a good chance of playing out, especially if you revisit the post. Remember, just use the post by ticker symbol drop-down box, or if you go into the on the site Trading and Investment Ideas, go to the short trade category. There's a cloud, a symbol cloud. It has the the symbols are in purple or blue. You can click on it and it'll bring you all previous posts and notes on that trade. So I won't spend any time talking on this, but that can be referenced on the site. And that was Northern Trust. Next one up is Overstock. Overstock is playing out nicely. You had this looks like a broadening top pattern, aka megaphone, and prices have already hit the first target. And as you can see, look like they're bear flagging here. What I like about this one is they've not only moved below this first target zone, or I should say the first target was a static level, 25.30, but I had this zone here, support zone drawn. Prices are starting to crack below that. But if you'll notice here's the 200-day moving average, which has acted as really nice support in the past on Overstock, and prices are now trading below the 200-day moving average. Of course, we had negative divergences at the highs here. This was the previous trade on Overstock, and it was hit for a very nice gain here. And I think that this second target has a good shot of being hit. especially if you look at the volume of price histogram here. A lot of overhead supply, and once we get into this thin zone here, that stock should move down very quickly because there were very few trades. This was a quick move up from this level here down. So my expectation again will be a quick move down to the T2 level once we fall below this recent cluster of prices here. PWRD, perfect world. It's a perfect trade for a short, textbook descending triangle pattern, which is inherently an inherently bearish pattern. You look for a downside break. These things can break either way, and you have to respect it. But in this case, they broke down to in the expected direction. We hit the first target zone, consolidated around there, and now have dropped below. So this is just textbook price action here. A sharp move down, which would be really a flagpole on a bear flag pattern or a pennant. And so the stock flagged for a little while, which is a continuation pattern, and has now broken down. So T2 is the next target, and I may extend this one as well, but I could easily see it going, especially if we look at the length of the flagpole. This pattern projects probably down to this area here. We have this reaction low around 1440. As of now, this is my current final target, but this one looks good. And being that prices are so close in proximity to T2, I wouldn't be entering this one here. Although if you wanted to, you could take it if you were targeting down to that 1430-ish level, take it here, and then you'd have to place your stop relatively tight, not much above the top of this T1 zone. But that's PWRD. This is QIHU. This one looked like a promising short earlier in the year, was stopped out for a loss. And, if at first you don't succeed, try again. So I recognized this shooting star pattern back on the stock a couple months ago. Was a short. Actually, I'm using the 60-minute chart to really hone down the exits on this one. We hit the first target quickly after the breakdown. This is, I believe, that same uptrend line. I'm not sure exactly where we added, whether on the breakdown or the retest right after the shooting star, but we did already hit the first target for a quick gain, and this is a support level here. These remain the targets on the 60-minute frame. Again, you can reference that on the site. But although this may morph into a swing trade depending on how the market does, it looks very thin here between this T1 level and T3. So if you look at these divergences, super steep, sharp divergences. Double negative divergence on the RSI. We had divergence here, negative divergence, and then again here, and we had that steep divergence on the MACD on the most recent high that made a slightly marginal high following the shooting star, and so that's the targets here. Looks like we'll have some decent support at that T1 level, and once that goes, it's very thin. The stock could fall quickly, and there is a good possibility this one could morph into a swing target, all the way down to the 49-ish level. So that's QIHU. Here's Spectrum Brands SPB, Spectrum Brands. This one was recently added as a short here on a breakdown of this long-term uptrend line. In fact, let's go back. This trend line goes all the way back until early August of 2011. Very well defined. Just a ton of reactions, candlestick touches here going back on this multi-year trend line. Divergences building, as you can see here. This is a longer-term chart. Multi-month divergences building on that stock into the highs. Finally had a breakdown. Very high valuation. I sometimes have to scrub the P/E ratios here from this charting program. They're not always accurate, but I do know it has a very high P/E ratio. This is showing a 333 P/E ratio. Great company. I use some of their products, but it's a case of just too much too far. Overvaluation coupled with a technical breakdown. My first two targets are listed here. T3 is my final target. I will try to follow up with the suggested levels, the exact cover levels. And what I've noted here is I have on some charts potential targets. And one of the reasons I do this, among others, is the charts and the markets are dynamic. They're not static. They change over time. Right now, we're in a very strong uptrend. This market has had, of course, not talking about today. We're down today, but overall, the bid beneath this market has just been unbelievably strong. But I maintain, as I have for months, that by year end, sometime in the fourth quarter here, we're going to start what will likely be a pretty powerful, sharp correction. Maybe that happens, maybe it doesn't. Now, if it does, this is where my trading plan becomes flexible, and I will tend to extend targets on a lot of these trades. Now, the other component is, I'm not just looking at the broad markets, but the charts as well. In other words, if I'm watching Spectrum Brands and all of a sudden we're coming up to a target and there's some strong divergences on maybe the 60-minute chart or the 2 or 4 hour chart or even the daily chart, that might make me change my mind and decide to close a trade at that final target or possibly even earlier. But I just want to put these out there for you longer term swing or trend traders. A trade like this does have the potential to morph into a much longer term hold, longer term swing trade, and that's important in helping you determine, what position size to take, how you're going to enter it. Will it be a one-time entry, or do you prefer to scale into the trade, and of course, where to set your stops. So right now, stops should be dependent on which target you're going after, but overall, there's some nice resistance right here around the 67. Give it a little margin of error, call it 67.80. Anything above there would make sense for a logical stop, because the stock will then have broken out to new highs in addition to having regained that trend line. So I'd like to see SPB remain under that trend line and definitely remain under that, 67.80 level, I think it was. Here's Tesla. This one has been a very lucrative short. I have a pretty good position in Tesla. Breakdown a rising wedge, retest a higher level just right about to the apex of the wedge, and disregard these lines. I just drew these the other day. They are trend lines on the move down lower. But we are just now coming up to the top of my first target zone. And I'll take a look at the market here today in a little bit, and depending on what I think the broad market's going to do, I may cover at the top of the zone or the bottom. Either way, this is the first and only target zone for now, and more than likely I'll probably be out of the trade, and I don't think I'll extend any targets on Tesla at this time, regardless of the insane valuations on the stock. Here's Yum. Yum Brands. I still like this trade. This one is a potential triple top 1, 2, 3, and prices have remained within that triple top base. You have this range here, and typically you need to break down. The sell trigger for a longer term short is a break below the bottom of that range. Now this one's not very well defined, but I have T1 is really the bottom of that range. So when we get here, that'll be the first target, and any solid break below there. It's actually easier to take a look at the weekly time frame on this one. We had this uptrend line break, and the orange lines here define the triple top pattern. So if we break down this purple line, which is just basically a measurement, if you will, if I can grab it, from the top to the bottom of the pattern. That's how you calculate the move for a triple top. You add it to the base, and that's where the measured target would be. So if it were to break down, now I have a pretty decent horizontal support level here, which more than likely I would, if we happen to get there, that's around the 57 area. That's where I would be covering all my position on Yum. And finally, to wrap the short ideas up, I didn't cover everyone. I just covered the ones that stand out to me right now. Zillow, this is one of my favorites. I've got a healthy position in this one too. Just a beautiful, beautiful. It's nice to see these bearish patterns finally play out, especially in given the strength of the market. But Zillow is another one of the insanely valued stock clubs. I mean, I'm showing a PE ratio of 5,000 here. If I'm not mistaken, Zillow doesn't even have a PE ratio, because I believe they don't have any earnings, to positive earnings to compute it on. But either way, an insanely valued stock, and I'd have to look at the notes, but I think we first shorted this one on the break of this wedge, hit the first target zone for a very nice profit here. Let's see, I'm checking. Let me take a look at another screen here and look at the site. 16.4% gain. So we got a 16.4% gain there. We had, as expected, a bounce off the first target zone. That's why there are multiple targets. They allow traders to book partial or full profits, maybe recycle back in on a bounce. So what happened with Zillow is, since breaking below that trend line, we had a nice back test yesterday, which would have provided a really excellent add-on or new short entry. And even today, this is still offering an objective short entry here, because if you look at this, this is consolidation. This is somewhat, although not very well defined, but you can consider that really the same effect as a bear flag pattern. We had this initial move down, consolidation, and now an impulsive breakdown below that recent consolidation range, as well as a break below this key support level. And if you look here again on the volume of price histogram over here, very, very thin. In other words, the move from this point, we broke out above this previous reaction high, prices shot up with very little volume, very few trades occurring. So again, sharp divergences at top at the recent highs, and now that we're in a thin zone, my expectation is a pretty quick move down to my final and preferred target here, a T2 at 63.82. Okay, folks, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed.